AI is about growth, grabbing a piece of that $3.6 trillion market over the next decade. Investing, though, is about getting the best deal on a great stock, seeing what the market doesn't, and multiplying your money. In this video, I'm combining those two ideas, showing you where the best deals are in the stocks that could make you rich. I'm using the forecasted revenue growth for the complete list of 60 AI-related stocks, then adjusting that by the price-to-sales valuation to rank every stock that is going to benefit from the revolution in artificial intelligence. And you won't believe the difference in some of these. These aren't just cheap stocks, they're undervalued rockets. While investors are paying multiples of 25 and 30 times revenue, sky-high multiples for stocks like ARM Holdings and Broadcom, I'm going to show you stocks trading for a discount of 90% on that valuation and booking higher revenue growth. Can't miss investments. And first up is one I recently added to my own portfolio, shares of DigitalOcean Holdings, ticker DOCN, down 16% this year, but with the upside and value we're looking for in these stocks. DigitalOcean is also the smallest company in our top 10 list at just $2.5 billion. The company provides a full-stack cloud platform used by hyperscalers and AI that is simple and scalable. And while revenue growth of just 13% forecasted this year isn't as high as we'd like to see, the company is positioning itself in a giant market opportunity. Just the $140 billion market for digital native enterprises is huge compared to the company's $800 billion in revenue, and this market is growing at 23% a year. That is exactly what you want to see in these growth stocks, because even a fraction of that $140 billion market, or expanding into the $400 billion public cloud market, is going to mean years of that strong double-digit growth for DigitalOcean. The shares are cheap here compared to the company's own history, trading now at 3.4 times on a price-to-sales basis, which alone is 26% discount to the average price-to-sales ratio the stock has been at over the last year. But then adjust that valuation by the forecasted sales growth, and you get one of the best deals in AI stocks, trading at an adjusted price-to-sales of just 0.26 times. We're just getting started, but I want to walk you through how I put this list together, how to find the best AI stocks to buy, so you can do this in any theme, anytime you want. I first dug through all the research, compiling a mega list of the AI-related stocks. I then used Yahoo Finance to find the market cap. That's the total value of all shares in the market, so the company's total market value, and then the price-to-sales valuation. That price-to-sales is my favorite measure for growth stock valuation. How many dollars for every dollar of sales are investors paying, and how expensive is the stock? For example, right now, investors are paying a price-to-sales multiple of 21 times for shares of Broadcom Inc., ticker AVGO. Now that's pretty expensive considering you can get shares of Synopsys, ticker SNPS, for just 11.4 times its sales. But here's the catch. Broadcom is growing its sales at a 21% pace, while Synopsys is only growing at about half that fast, forecasted growth of 10.4% this year. So you have to ask yourself, wouldn't you pay a little more for a company growing at 21% rather than 10% each year? And that's why I dug into the analyst forecast for growth on each stock, adjusting that price valuation by that growth to reveal the best deals in these AI stocks. Doing that, you see Broadcom at 1.01 adjusted price to sales is now a better deal than versus Synopsys. And while I love Broadcom for its lock on that AI infrastructure theme, it didn't even make the top 45 names for best deals in this group. Shares of Marvell Technology, ticker MRVL, are down 50% from the peak earlier this year, taking the stock back into value territory. That high-performance semiconductor maker is booking strong growth in the data center build-out, but middling growth in enterprise networking it is getting absolutely crushed in a slowdown for automotive and end markets. Now, despite that weakness in some segments, analysts still see the company growing sales by 42% this year, and while at 9.5 times price to sales on current revenue is fairly high, that kind of growth goes a long way to making it a bargain. EPAM Systems, ticker EPAM, is another one way down from its peak earlier this year, falling 36% to a 6-year low. The $10 billion consulting and engineering services company is seeing new growth in AI and positioning for that $2.1 trillion enterprise IT services market. EPAM is leaning heavily into AI for software development, from its orchestration platform to delivery and organizational platforms. Now, growth here is okay at 13%, not great but good, and combined with a current price of just 2 times sales, it's a strong contender for value in AI stocks. We'll get back to our list, but you're going to notice one thing, that the biggest trillion-dollar giants didn't make the cut. None of the 7 largest AI companies made our top 10 list, and in fact, you have to go all the way outside the top 15 to find the first trillion-dollar mega cap. Of the 7 largest, 6 of which are part of the Magnificent 7 stocks, Amazon is the best deal here at 3.4 times its sales on an 8.9% sales growth. But here's something that surprised me. Nvidia, even with its expensive 23 times price to sales valuation, is surprisingly cheap given that amazing 43% forecasted growth, making it the second best deal among these 7 largest companies. Back to that top 10 though, and Tempest AI, ticker TEM, offers the highest growth on the list, but also the highest current multiple, and a stock chart that looks like a roller coaster at Six Flags. The healthcare AI company's 3 product lines, testing, data services, and applications, hopes to transform this sector through its AI-enabled platform and 300 petabytes of multimodal healthcare data. That potential could take revenue up 80% this year alone to $1.25 billion, and investors are willing to pay for that kind of growth, with the shares trading for nearly 12 times current sales. Factor in that growth though, and it's the 7th best deal on our list. Dell Technologies, ticker DELL, doesn't have the growth that we like to see in these AI stocks, but it and 2 others on our top 10 just got some great news. That news came in the form of NVIDIA's earnings, which showed the AI chipmaker was on track to grow revenue by 53% this year, and is already shipping more than 13,000 of its new Blackwell GPUs each quarter. And that is great news for Dell, because if you follow the AI supply chain, those semiconductors NVIDIA is selling by the truckloads have to be put in servers that Dell makes, and with thousands of servers in a single data center, this AI infrastructure theme is still in its early growth stages. Now, the problem for Dell is that laptops and PCs that make up a much larger part of its business are in a cyclical downturn right now, so the company is only expected to post 8% growth this year, and even slower next year. But that cyclicality can change fast, and PC demand is going to pick up. When that happens, the data center business is still going to be growing, and this stock is going to look like a steal at just 0.86 times price-to-sales ratio. We've still got the top 5 stocks to buy in that AI theme, but these aren't the only stocks I'm buying. In fact, there's another group I call my forever stocks because I don't even have to research them anymore. I just let them run higher, and the proof is in the returns, with the group up an average 94% last year alone, and one of the picks up 125% already this year. I'll leave a link to the report on the stocks in the description below. It's totally free. You're going to see that first stock immediately, and they'll email you the full report with the other stocks. It's an easy way to support the Let's Talk Money community and see some of my favorite stocks to buy, so look for that link below. Upstart Holdings, ticker UPST, is another stock not necessarily a pure play in AI, but a company leveraging AI to be the best at what it does. Already, the online lender has driven a 50% reduction in its customer acquisition costs, has cut its cost to onboard loans by 2/3, and has been able to offer loan rates that are 1/3 lower than competitors, all through the use of its AI model. That's helping it book the second highest forecasted growth among our top 10, with sales expected up 58% this year to just over $1 billion. The current price-to-sales ratio of 5.96 isn't terrifically cheap, but that kind of growth makes it a deal very quickly. Hewlett-Packard Enterprise, ticker HPE, suffers under that same slowdown in PC and laptop demand that we saw in Dell, and shares are down 18% this year. But it also benefits from that same upside as a big player in the AI server market and the hundreds of billions of dollars pouring into data center infrastructure. We see similar growth forecasted right around 8% for this year and slightly lower next, but a cheaper valuation on HPE does help it edge out Dell in adjusted valuation. These aren't the sexy AI software plays that we see in some of these stocks, but they are solid upside bets. I'm going to reveal those best 3 stocks to buy next, but I wanted to share the entire list of 50 stocks that didn't make our best deals in AI because there are some really solid companies here, even if they aren't the best bargains. In fact, we've got another 14 here that I would still consider very good deals at less than 0.5 on that adjusted valuation basis. Within these, we do see Alibaba, ticker BABA, which some of that is a normal discount you see in Chinese stocks, so maybe not quite the deal it appears. But you also see names like AMD, which is one of my favorite value plays right now, and SoundHound AI, ticker SOUN, which I've been buying since February of last year when it was around $4 a share. Those of you in the nation know I think SoundHound is poised to dominate the market for AI assistants and could be a $1 trillion company someday, which would be a 25,000% return from here. Within that also ran list, you've also got powerhouse stocks like NVIDIA and Amazon, both of which should probably be a staple of every investor's portfolio. Scrolling through, I also own UiPath and Snowflake, which both jumped recently on earnings and became more expensive, though still good deals. IBM and Salesforce, ticker CRM, are ones I think could surprise higher in the future. Both are attractively priced, but just not producing that kind of growth they should. And within the worst 10 valuations here, and understand this doesn't mean they're bad companies. In fact, it might mean the company is so good and investors love the stock so much that they're willing to pay much more for less. But here we find names like ARM Holdings, Palantir, and Tesla, along with 3 stocks with negative sales growth, including perennial dog Intel. The largest company in our top 10, Micron Technology, ticker MU, at $108 billion market cap. AI is boosting demand for Micron's high bandwidth memory, HBM, which feeds data into AI chips. As AI grows, those chips need faster memory, and Micron has 45 years leadership in memory and storage solutions. What's really impressive, though, especially given its size, is growth of 41% expected this year. A lot of these other stocks with growth of 30 and 40% are growing off just $1 or $2 billion in sales. But growth of 41% off Micron's current $25 billion in sales, that is hugely impressive and puts this one third on our list. Of the top 10 AI stocks, Symbotic, ticker SYM, is the one I'm most excited about, and as one of the smallest at $3.2 billion, also has one of the biggest upside potentials. Symbotic is using AI-powered robotics and software to automate warehousing and logistics, with a 4-year development partnership alongside Walmart that alone could see revenue booming. And just installing its robotic systems to warehouse operations is a $432 billion market, with the operational side another $500 billion. The company recently acquired Walmart's robotics business, which means it's developing the world's largest retailer's warehouse and delivery robots, pretty much making the world's largest retailer dependent on Symbotic. But this company is going well beyond that. Its systems are being used at Albertsons and Target, as well as a $22.7 billion backlog of orders. To put that into perspective, Symbotic booked just $1.8 billion in sales last year. Even on 20% plus growth this year is only to $2.2 billion, so that kind of a backlog means this growth keeps up for years. Despite that growth, shares trade for a price of less than 1.5 times sales, and a second lowest adjusted valuation among our 60 AI stocks, all of which is part of the reason why I bought 5,600 shares, over 160,000 worth, and am watching this one move higher. I'll reveal that best deal in AI stocks next, the largest stock in my own portfolio at nearly $1 million in shares, and growing sales at 47% a year. But good stock analysis doesn't end with that adjusted valuation we're doing here. If you want to make sure that you're always going to find the best stocks to buy, watch the video here in the corner next. A simple 10-minute process for analyzing any stock. It's a quick filter I developed over more than a decade working as a professional analyst, and I'm going to show you how to do it in less than 10 minutes. The fact that Supermicro, ticker SMCI, is the best deal in AI stocks shouldn't surprise you. It's why I own over 28,000 shares across 3 accounts and is my largest position by far. And if that earnings report by NVIDIA was good news for Dell and HPE, it's the Ave Maria for SMCI, which according to one analyst is the pure play AI stock, because the company dominates in that kind of performance-built servers that are customized for AI workloads. SMCI has a commanding lead in the market for AI servers, and that contributes to its supernormal growth, forecast for 47% this year and 35% next to nearly $30 billion in revenue. But here investors are still caught up in the allegations that were either not true or just overblown. Allegations from a short seller that has since closed up business, and the stock is still trading at that same fire sell price like it might be delisted. Only 3 other stocks in our list among the 60 trade under a price to sales of 1.5 times. All 3 are good deals, but none even come close to the kind of growth we see in SMCI. These shares have traded as high as 6 times sales in the past, when it hit a peak of $120 a share. That was when sales were less than $10 billion a year. With that AI data center theme still intact, shares of SMCI could double where they are right now and would still be cheap. See the stocks I'm buying for the next 30 years, my forever stocks, with the link to that free report in the description below. Don't forget to join the Let's Talk Money community by tapping that subscribe button and clicking the bell notification.